All right, good morning, everybody. Welcome to beautiful Huntington Beach, California. Welcome to Future Proof. It's the biggest, the sunniest conference in all of our industry, and welcome to the panel this morning on building the future of wealth. My name's Sean. I'm a senior editor with the Daily Upside. We're a finance and markets newsletter with about 1 million subscribers. And we got a great one lined up for you today. Two of the brightest minds in our industry are going to share their insights on some business strategies, some of the evolving trends that they're seeing in the marketplace, and some of the key opportunities that advisors will want to keep an eye on because the global wealth management market is exploding. Projections have the valuations of that global marketplace at $2.92 trillion through to 2029. That's a growth rate, compounded annual growth rate of 8% from now until then. So the opportunities are tremendous. As you could have guessed, AI is going to play a large part of that. We're not going to get out of a panel without talking about AI here. We saw Morgan Stanley roll out an ambitious AI project that it says it can free up about an hour a day for its advisors. You multiply that by 20,000 advisors at the firm, and you begin to see the scale that this technology is going to have. It can sit on Zoom calls with clients. It can record those calls. It'll take notes. It'll write up follow-up emails, and the advisor just has to hit send. So it's doing a tremendous amount of tasks for advisors. Now, if AI could just help babysit the kids, we'd really be in business, right? So we'll also dive into the importance of data. It really is the new oil, and how that will shape the future, be it personalization for clients, for lead generation, for use cases we haven't even discovered yet. So we'll talk about all of that and a little bit about practice management as well, growth, where advisory firms are finding growth, and how all this coalesces. So welcome. Lastly, we're taking questions from you guys. You can pop open that Future Proof app and ask anything your heart desires. We'll answer it. We'd like to hear from you and hear from your peers, and you'll get a break from all of my questions. So let's dive right in. Of course, we have Natalie Wolfson. Welcome. She's a CEO of Orion, a longtime Asset Mark executive. Welcome, Natalie. And Andre Moore, president of Integrated Partners. Welcome to both of you. So as I said at the top, AI, a lot of hype right now, right? Goldman just put out a study that found investments in the segment are going to hit $1 trillion in the next few years, $1 trillion. Markets have loved it, right? We know NVIDIA, we know Mag 7. We'll see how those investments play out in terms of their valuations. Frankly, for me, I've seen a lot more advancements in AI in kind of adjacent segments like asset management, say, where you're seeing like real-time trading and advanced analytics and all these kind of sexy new things. It feels like AI is still trying to find its footing in wealth. So Natalie, maybe we'll start with you. What makes you most excited about AI for advisors, and how do you envision that in the next few years?
Yeah, so thank you very much for the question. At Orion, we're investing a lot in AI. The first step of investing in anything is understanding where clients, advisors, have a need and where we can drive the most value for investors. And so we just recently, 2 weeks ago, did a quarterly pulse check survey where we asked advisors about their use of AI or their interest in AI. And interestingly, almost 50% of advisors are using AI already today, about 46%, and another 43% plan to use it in the next 3 years. And it's good news that it's those percentages that are investigating it, doing R&D, and planning to use it in the next 3 years. The other thing I'll just say about AI is at Orion, we've done a lot of testing and learning and research. And what we found is both in our CRM technology, where we have a tool called Redtail Speak, which basically pre-drafts text messaging out of the conversations that you have with your clients and record in the CRM. And then a portfolio comparison tool, which brings together behavioral finance. It brings together information about portfolio construction and portfolio management, and also creates a starting point summary for the follow-up conversations or the follow-up engagements with your clients. And what we've found is advisors really appreciate those starting points for those follow-up conversations. An activity that used to take hours to put together the follow-up emails or the follow-up text messages, it's more of just a review to check that it's accurate and then a send. In addition, if you look in adjacent industries, There's a lot of great work being done to simplify the most complex parts of a client interaction. So as an example, DocuSign is testing a summary of mortgage documents, so that rather than just reading through hundreds of pages of mortgage documents or just signing wherever there's a yellow sticky, instead there's a summary put on the top that explains the parts of the document that are most impactful and meaningful to the client. I feel like we in wealth management can work with the custodians to do the same thing with our paperwork. So it's a little less daunting to open an account. The other thing that we're doing a lot of testing on, and I would encourage you all to do this, is similar to what's happening at Morgan Stanley, is testing how AI can help you in the servicing of clients. Putting information about client conversations and client questions in a large language model, captive large language model, and then using those insights so that when you're training up somebody new, or you have a new financial planner, or you get a question that's not often asked, the answers to those questions are served up in a very, very immediate and accurate way. And so a lot of work going on in AI throughout the industry, and I think it's really exciting. It'll help us all spend time on doing what's most impactful and important, which is answering those questions for clients or helping those clients work through their emotions in ways that technology can't help.
I think you make a great point, especially about red tail speak. When I think and talk to our advisors about AI, it's looking at AI as a collaborator. So when you are thinking about writing an email, you're trying to take a complex topic and make it so your individual clients can understand it. Use AI like a ChatGPT to get your foot into understanding how this technology can impact the conversations that you're having with your clients and provide you with talking points to have more impactful conversations. So we always say, look at AI as a collaborator. It's a very overwhelming thing to think about for an individual advisor. So start small in somewhere that feels safe, which is, how do I write a better email? How do I have a conversation? Am I looking at all of these topics of a specific financial planning item for one of my clients?
Yeah, I think you bring up a great point. I mean, financial advice is so much a relationship business, right? And so obviously you're not going to take advice from a chat GPT probably, or at least not yet, but you can definitely utilize that to help those clients automate a lot of the kind of everyday things that really build that relationship up. And so you can focus on the real topics that your clients are having, the harder questions that you have to do when the markets aren't doing so well, et cetera. So I thought that was super interesting. I think another way to leverage AI, or a lot of people are talking about, is with kind of real-time use cases. I know they're doing a lot of this in the banking industry a little bit more, but using those to kind of find personalized ways to create interactions with clients. So just like in real time, maybe having best products that might be new products that might be available to them, or any other ways that can personalize that client experience. What are you looking forward to most, or where do you see kind of this personalization? We hear a lot about that on the fintech side. Where do you see that playing out? How important is that in the future of our business? Maybe we'll start again with you, Natalie.
Personalization is it's a mega trend. So in every aspect of our life, it's highly personalized right now, and it's personalized in a very scalable way. And we in wealth management have to ride the wave of that mega trend. Our clients expect it. Other industries are benefiting from the scalability of personalization, so the ability to offer personalization at scale, so you don't have to hire as many people, and you can manage your cost structure and still create a great experience for your client. The other thing that I'm really excited about in this megatrend is personalization is opening up traditional asset management forms. And so you no longer need to invest in a mutual fund to get access to the market or an ETF. Instead, you can invest in a personalized portfolio, whether it's a custom index or something else, that can be managed using technology that's built for purpose for just that. And suddenly you can do what investors have expected from advisors for many years, which is deliver tax-advantaged returns. And if you survey investors, 80% of them expect that from us. And because of custom indexing and tax management and portfolio personalization, we can do that now at scale and deliver reporting to clients that's highly personalized that delivers what they've always wanted, which is the tax-advantaged returns. Additionally, in the technology we deliver clients, the investor portal, the apps, in the tools that we use to deliver fantastic financial plans, there's a high degree of applicability of technology. So an example of that at Orion is our behavioral finance tools. We have simple surveys that you can deliver to your clients using our tools, and those surveys put inside our financial planning tools the behaviors that spouses or partners have. So if one's an optimist and one's a pessimist, then that information is in their financial plan, it's in the CRM, it's in the portfolio construction tools, so you can personalize that conversation knowing the behaviors of each client. And so a lot of great things are happening with personalization, both in tech and in wealth right now. I would argue that asset management and technology lines are blurring, and they're blurring because of the need for personalization. So really great time to be an advisor because there's so many tools for you to use in the area of personalization.
I would dovetail on the client survey. If you haven't done a survey of your clients, I would highly recommend doing that. Not only to understand their level of satisfaction, but honestly to truly understand them as a person. In the coaching that we do with our advisors, we find that they have not captured a lot of the data around their clients that will allow for personalization. What's their favorite hobby? What's their favorite restaurant? What's their favorite charity? When you think about your referral process, are you automating a thank you or a gift to a client that referred that client to you? If you don't know enough about them, it's hard for you to give them a personalized experience because you don't have the data. So I think when you think about personalization, there's two steps. And the first step is understanding whether or not you have the data at your fingertips to provide that personalized experience for your client. And then how are you leveraging that data? So are you tracking things like the last time you reviewed your client's estate plan? When's the last time you've done a life insurance review for them? If you have those data points, you put them in your system and you automate proactive reach outs to your clients, you're creating that experience that your team is there and paying attention to them through every life phase without honestly needing the human man hours to do so. So definitely now is the time to start collecting the data that you need on your clients so you can properly leverage it with some of these really exciting AI tools that are coming out.
Super interesting. I think that's a good segue into data more generally. I know I see some questions coming in, so we'll get to those in a second. But with data, obviously, like I said at the top, it really is the new oil, right? There's a lot of conversation around data, the power of data. And I think to your point, Andre, is how do we get the most out of that data, right? So are advisors truly leveraging what they need to be and capturing that data? Is there a difference between some of the really massive firms and a smaller RIA with 200, 500 million and just a couple hundred clients or something? Can they still find those same great benefits? How does it look in terms of the scale of the company and just in general? Are advisors doing enough, and how can they do more?
I'll say from a data perspective, advisors are not doing enough. And that's because they haven't had the tools in order to collect and review that data. And I would say there's two types of data for advisors that are important. There's the data about your clients, and then there's the data about your business. So our belief is that retention is key to future growth. So when you think about retaining your clients, does your team members know who your top revenue generating clients are? And if they don't, I would have you go back to your office after this, run a report of your top revenue generating clients, and ensure that your team knows who those people are. Because those are the clients that you want to ensure are happy. Those are the clients that you most likely want to duplicate. And those are the clients that you want to get referrals from. So data from an understanding of your business perspective is going to be really important, especially as we talk more about personalization. There's probably a niche within your practice that you didn't even know that you had. And through data, you'd be able to find that and proactively reach out to some of those clients. hey, I was just talking to Natalie. She's worried about retaining key employees. I know that's a concern of yours. Let me tell you this interesting strategy that we were able to implement for her. So you're building excitement around your practice because you're personalizing the stories that you're telling your clients. And stories is what really gets clients to take action. So when you have that data where you can link impactful stories to clients, it will help you grow your business.
I just want to build on that a little bit. You know, it's interesting. Most of financial advisors didn't get into the business of delivering wealth solutions to clients because they love the idea of building a data architecture or building accessible data. It is extremely hard to do, and it is an expert skill. Fortunately for all of us, we're in a time where there's plenty of firms that can and will help you do that. In addition to that, so there's Redshift, there's Snowflake if you're a larger firm, there's companies like Orion if you're a smaller firm, who can help you set up the system, permission it in a way, help you with your workflows so that you're capturing information and treating it like the precious asset it needs to be. It's really unfortunate that most data is an output of other really important actions. Whether you're entering a new contact in your CRM, you're really trying to build a relationship with that client. You're not trying to capture the information about the client. And both are very important. And so, again, technology, we try to make our tools simple. We try to leverage aspects of technology advancements like AI or data integration on your behalf so that once the information gets in the system, it's highly accessible and highly usable by you. In addition, many firms like Orion are trying to reimagine their own data architecture. We have a global entity project going on right now at Orion so that if you use Orion for CRM, the information that you see in the CRM is also visible in the portfolio accounting system, in our reporting system, in our wealth management system, et cetera. And companies like us doing that work on your behalf means that you don't have to spend your time building your own data architecture. So definitely make sure that when you're choosing an outsourced partner or when you're building or starting your firm, you do so with some expert advice in the area, because making small mistakes now have huge implications when you become much bigger.
Just a quick follow-up on that, Natalie's. We've seen Kitsis's fintech map that's getting larger and larger and larger and larger. There's so many fantastic firms out there. I always, just as a reporter, wanted to do a deep dive into just how do you avoid the paralysis? How do you really, are there any top tips that you might, or where can an advisor that's looking to say build out a stack, or an RA that just launched to build out their stack, where do they start? Are there any quick tips?
Yeah, so I certainly, one of the great things about our industry is it's highly creative and innovative. I love Kitsis's map because it shows you all the innovation in the industry. And I also love that over time, I've been watching that map for a long time, the icons get smaller and smaller and smaller and smaller. And that's because of all the innovation. So a couple things. I love to be armed with facts from people who have gone before you. And I will tell you that 90% of advisors know they're reliant on technology, but only 48% find any value in it. So less than half find value in their technology, even though they know they're reliant on it. And the reason for that is the technology is not integrated. And then when you ask advisors whether they use bundled tech, unbundled tech, or a mix of the two, the vast majority use a mix of the two. And the reason for that is there's something they care really passionately about. And for that thing, they want to do the research. They start with the Kitsis map. They build an RFP. They go out to all the providers, and they pick the best of the best based on what they need. But for the rest of it, they want it to be integrated, easy to use, low cost. And so my advice to all of you is to know what part of your technology stack is critical to your value that you deliver to your clients or critical to your satisfaction in your work. And then the rest of it, find a most-in-one partner who smooths those integrations, who smooths the client experience for you. Also, most of the most-in-one or all-in-one providers have integration strategies. Some believe that you have to integrate with third parties and build your own. Orion is one of those. Others, they want to control the whole stack because they want to deliver the best data experience possible. If you believe passionately that there's one part of your two parts of your value, like you really care about the financial plan and you really care about the reporting, as an example, make sure that the provider you're using integrates with those third parties so that your solution to your clients and your workload is reduced.
Awesome.
I would just add one thing to that, which is, I mean, attending events like this is a great way to learn about technology, but join a study group, talk to other advisors, because there's two components to technology. There's how the technology works and what it is meant to do, and then how you implement that technology within your business to make what you do better. Technology should not define you, but it should make the pieces that make you uniquely you better. And the best way to do that is to talk to other advisors. Study groups, reach out to them, but getting a coach to take you where you want to go who's already been there is the most helpful thing, to Natalie's point.
Yeah.
I just want to say one more thing on that. One of the things that AI does beautifully is it captures client feedback and delivers to the company that's building the technology or building the client experience or building the wealth tool information in a highly actionable way. And so at Orion, we're using AI to power our client feedback. And what I mean by that is we have net promoter score studies, we have client satisfaction studies, we do product satisfaction surveys, we do pulse checks of the industry. All of that goes into an AI tool, and it tells us what you need us to focus on, the good and what you need us to build on, so the good and the not so good. And I would encourage you to do that with your own clients, to use AI so that you can interpret their feedback.
Yeah, no, well said. Yeah, adoption is another one too. Implementation, adoption, a lot of things to consider. But I'm sure talking to your clients is an excellent place to start, and then talking to your peers for sure is another great way. So a lot of questions coming in. So let's get to a couple of them. I like that one. It's from anonymous. But what technologies do we use now that are going to look completely different in the next 5 years? You said CRM, portfolio management. What do you see just getting reimagined in the next few years?
So I'll start that one. I think that we're going to see a completely reimagined client experience for all of you. We've been talking about Kitsis and the creativity of the industry. Our industry is really functional with its tech experience. You know, you go into your CRM system, then you come out and you go into your financial planning system, and then you come out, and then you go into your reporting, and then you come out, and then you go into your call management system. It's very functional. And companies like Orion, we're going to flip that on its ear, and instead we're going to develop an experience for all of you that's built off of a day in your life. So I think the CRM is at the center of all of it. Your interactions with your clients, whether they be portfolio construction, whether they be reporting, whether they be business management and orientation, I think the CRM is at the center of it. In addition, I think we're going to see a transformation of paperwork. I know that's not very exciting, but it's definitely needed, and that's going to look completely different 5-10 years from now, because it has to. The paperwork's incomprehensible, and it creates more confusion than it clarifies. I think regulators are really focused on that too. I also think that a third and equally important technology that's going to change is just reporting generally. It is going to be so much more powerful. Whether it's business reporting or reporting on the activities in your client account. A lot of AI is going to really help us be much more personal with reporting and help you be much more efficient. So those are 3 areas I think are going to change a lot.
I would definitely agree with you from a paperwork perspective, and as an operator of a financial planning business, I'm probably most excited about that. We are testing an AI tool right now that actually removes 2 full-time jobs from our operational team, and that's hugely impactful to an RAA. And what that will allow us to do is train those teams to do better work, and that's really exciting to us. They can have more impactful conversations with clients because they have the time to do so. So I think technologies will look similar. Portfolio management will be the easiest to integrate AI for sure, but it will allow for better integrations, so data will flow seamlessly across all of your systems, freeing up a significant amount of time. So as you think about how operationally your life will get easier and free up your time, what are you going to do with that time for yourself and your clients and your team in order to grow your business? So one of the things we talk to our advisors about right now is professional development, and how do you have your team doing higher use work with your clients.
What sorts of things would that look like?
So right now we're really focused on taking advantage of opportunities that are out there in the world, right? And so how do you help your team uncover opportunities for your clients? So the Connolly case that just came out is a really good example of that from a business owner perspective. Are you and your team collecting buy-sell agreements from your business owner clients? If not, I would recommend doing so and using the Connolly case as a proactive planning piece. The other thing would be to think about the estate tax sunset. If you're not proactively reaching out to clients well under the minimum, then I think that you're missing an opportunity to say, hey, I'm thinking about you, and maximizing the impact of the potential change, whether they have 10 million or 25 million. But it's more about, I'm creating these moments where your client feels like you are thinking about them and you're having these proactive moments. So training your team members to be able to use the data to see those moments to reach out to clients is what will be a game changer for advisors. And the last thing I would say is integrating more tax planning. Natalie talked about that. Tax planning into what you are doing, especially if you're working with business owners.
Yeah, we've been seeing a lot of implementation of estate and tax planning are two huge areas. All right, we'll continue with some of these questions. We just talked about some reporting and some back-end kind of things. There's a question. It feels like custodians aren't working very hard to have better relationships with RIAs. We've seen that in a few instances from a few of the big custodians that have kind of not raised fees, but had done some certain different kind of relationships around fees and pricing. Do you think we see more custodians' choices in the future?
Yeah, I absolutely believe we're going to see more custodian choices in the future. We're already seeing more custodian choices now. You know, I do think the big custodians, they're trying, but like any big firm, it's tough to be nimble. And other large firms that don't have RIA-focused custodial options are coming in the market, firms like Goldman Sachs. And then there are also emerging firms or younger firms that are coming in to serve RIA's custodial needs. You have Apex, you have Altruist. So I think that everyone sees that an RIA custodial option that has easy to understand, straight through, highly digital, if not exclusively digital account opening, that respects the relationship between the advisor and the client as a third-party expert that's advising the account, and provides much more tailored services to RIAs. So much more robust high net worth solutions, much more robust reporting. As I said, a highly digital offering. We're already starting to see those available, and I think we're going to see more of that.
I mean, I would agree, and Natalie talked about the innovation of our industry. And so the beauty of independence is choice. The curse of independence is choice. So as you think about all of these new technologies and custodians coming onto the market, I would recommend thinking about what is the intention for your business and who do you want to be, because the grass is not always greener on the other side. And so you got to make sure, is this technology going to properly support my business? Before you make any shifts. But there will be, that Kitsis map is going to get a lot tinier.
It already has. We need a magnifying glass to get out there. I'm just realizing I also didn't get the memo on the sunglasses, but that's okay. All right, so we promised we'd talk about growth. Let's do that. We have 5 minutes left. Natalie, let's start with you. I mean, what do you think are some of the most sustainable forms of growth for advisors in the next 5 to 10 years? How is technology impacting that? What are your thoughts?
Yeah, I mean, when we talk to advisors about their growth, what comes up is absolutely a focus on high net worth and ultra high net worth individuals, having that as part of the product lineup, having what their needs as part of the product lineup, and understanding how to sell to high net worth and ultra high net worth. It's a huge part of the growth engine of most financial advisors. In fact, 80% of those that we talk to. And again, when you move your client base up market, the needs change and the solutions change. And so making sure your business is ready for that, small business services, trust and estate planning, access to alternative investments, robust trust reporting and alternatives reporting, just make sure that that's part of your business, and that your technology and investments provider deliver that to you, and that you also have the right practice management support so that you understand how to serve and attract these clients. Another big engine of growth is just getting more productivity and efficiency out of practices. 60-ish% of advisors say that that's incredibly important to them so that they can then refocus that time on growth. And by growth, meaning more classic business development exercises. Some advisors do radio shows, podcasts, write books. But typically, if advisors want to get to that next level of growth, they're either approaching a new segment like high net worth, where the most of U.S. wealth is in that segment, or they're intentionally turning their focus to business development activities and marketing.
Our belief is the most sustainable form of growth is organic growth. And so therefore, when you look at the health of your practice, have you looked at recently how many unsolicited referrals to the right types of clients have you received in the last 6 months? And that's a really good way to understand, are you projecting the right ideal type of client to your clients so you can sustainably grow your business through organic growth? The other thing is, at Integrated, we're known for helping our advisors work with CPAs to fuel their growth and move up what we would call the complexity curve, high net worth, ultra high net worth clients. And I think right now, the trends in the CPA space are very similar to the trends in the wealth management space. And if you have ever wanted to partner with a CPA, now is the time to do so, because you can deliver value to them that they are looking for their clients that they do not have access to. And a lot of the innovations in technology will make it a lot easier for you to do so. But reaching out to a CPA and you're growing your business through that model, we have seen our advisors double their businesses without doubling their number of clients, because they are able to, with that CPA, focus on the high net worth and ultra high net worth clients and grow their business that way. So an organic growth strategy should be about 30% of your time to focus on, how do I build this? How do I deploy this? But finding a really good COI partner and having your clients refer you to the right types of clients is a really good way to future-proof your business.
Well said. So we have time for one more quick one. I was going to have a little conclusion question, but I'd rather take it from the audience. This is from Mark Allen. Thoughts on solving for the operational technology issues when it comes to alternative investments to streamline asset allocation process of today? We have like a minute and a half, so we'll give you a quick lightning round on alts.
All right, so the first thing I would just say, and the most important thing about alternative investments, is their active investing is going private. And a lot of the most risk-managed investments are also going private. And so having alternative investments as part of your toolkit, I think, has never been more important than it is today. And it's going to increase in importance as alternative investments get more liquid. And so a few things. Some of the operational burdens will be solved by the liquidity managed solutions. And what I mean by that is, if there's liquidity that's quarterly or yearly, if it's a fully liquid investment in an interval fund form or another types of fund form, then the operational burdens go away because of the form. Additionally, a lot of innovation is happening with the paperwork and reporting of alternative investments, as those alternative investments firms want to increase their distribution specifically through this channel. And so your technology partners are working really hard to smooth that process for you, and to smooth the process for your clients. And so that's another question you should ask your technology partner. Orion, we're investing a lot in it. I know others are too.
Andre?
She was great, so we're going to just go with that answer.
We'll drop, mic drop right there. Guys, that's all we have time for. Thanks so much for being here. Thank you, Natalie. Thank you, Andre. Your insights were amazing. We'll catch you next year. Thank you.
Thank you.
Thank you.